two buy calls. The first one, of course, is from the low risk category. It's a buy on Raymond. Now we don't talk of the stock that often, but on the charts, I was looking at, in fact, the cotton charts, for the global asset class, and it looks like it's on the verge of a strong trending breakout. And in that light as well, I think many of these textile stocks could probably try and gain some significant upside from current levels. So Raymond is what I would recommend as the first buy call. The stock is trading at approximately 287, 288 levels. So a 310 to 320 could be a potential target range. Stop loss could be kept at 278. The second would be a buy from the NBFC stroke HFC pack. It's a buy on Chola Finance. The stock is forming an inverted head and shoulder pattern on the hourly time frame. So would suggest this as a buy. Short-term targets need to be kept at 255 and stoppers could be kept at 243.
Thanks for that, Kunal. Hi, Raghavendra. What about you? What are your high risk and low risk ideas for today?
Good morning. Let me first start with my low risk and moderate return idea. That is CDSL, Central Depository Services Limited. This is a asset-like model, and the company provides a trading a platform for depository services across equity and commodity markets. The company is present in a duopoly space, with the only other competitor or player in the depository space being NSDL. The market share of CDSL is a significant 52% in the overall depository space. So the other competitor being unlisted, CDSL comes out as one of its kind in this entire space. Since March, we have seen that for every one new client going to the competitor, CDSL has added 4 new clients. So that would be a significant market share gain in the quarters ahead. The recent norm where SEBI has put up rules regarding margin and pledge would actually augur very well for CDSL. That would serve as icing on the cake. We believe that the company could report a full year EPS of 18, give a multiple of 30, that comes to a target of 540 in the next 6 months. So that's an upside of 17-18% in the next 6 months as a moderate return, low risk for CDSL at current levels. My next investment bet is PFS, that is PTC India Financial. Recently, the parent of PFS, that is PTC India, has put its stake in the company at on the block. So PFS has 65% stake of its parent from the parent, and that is going for a stake sale. This could bring in some private player as a promoter, which could lead to a re-rating of the stock and a change in outlook to this NBFC company. PFS currently trades at 80. If you see the quarterly earnings from the last 2 quarters, the net interest margins have significantly improved 12% in the last quarter. The borrowing cost has come down to 8.6%. Last month, September, PFS has received a fund of 115 crores in the tax department, which will augur very well. PFS has a dividend yield of 6%. That is onboarding. So we believe that we can buy this stock at current levels of 18 for a price of 27. That is a 50% upside in 9 months from now. This is a high return, moderate risk investment from your PFS India.